Hey guys, and welcome back to the Matt to Million channel. This is video number 5, and today we're going to be looking at my journaling and how I actually go about it and the reasons why I've chosen the categories that I have. Just before we get started and head over to the laptop, if you could just give me a quick thumbs up, subscribe to the channel and click on the notifications when I'm next going to post, it'd be massively appreciated. So without further ado, I'm going to head across to the laptop now and talk you through all of my journal. Okay guys, so here we are on the laptop, just looking through my journal. Obviously some of you would have seen it in a previous video, just where I actually look back over some of the performance from the first 2 weeks of trading. I've still got a few trades that I need to update actually from this week, so I'm slightly behind on that, which is bad practice from my side, but I've allocated some time to do that. This is really just to take you through what I log and also why I log it, really. So let's go from left to right, so as you can understand the rationale behind it. Some of the stuff you'll probably agree with and maybe take away with you, other stuff you may think is a bit pointless. You may think I've also missed out some stuff. There are things that I am looking to put in, but you know, it's a work in progress as time goes on. So if we look here in column A, that's a pretty straightforward one. It's just so as I can track the progress per week of this challenge of turning 1,000 into £1 million. It just makes it simple for when I'm looking at the stats in terms of how the week has gone. You know, has it been profitable? Has it not? What my percentage week on week returns were, and it just makes it more manageable. The year again, very similar. Just sort of for the overview. The months here are quite important in my opinion. Okay, so obviously at the moment, for whenever you're watching this, but we're in the middle of the pandemic at the moment. The UK is in lockdown or just recently come out of a big chunk of it. So where we're looking at the months, usually you would feel seasonal trends. So some people might not be so good with the trades that they put on at Christmas or around Easter, in the summer holidays. So it's a good place to see that if you've got losing trades, is there a common month that you seem to not do so well in? And I know people that don't trade months based on this. Same reason really for the day of the week. There's a lot of people that don't like trading Mondays or Fridays. I'm not a massive fan of Fridays, especially not taking out new positions. I don't mind so much closing them on a Friday. But equally, I also quite like trading Sunday night into Monday. I have made quite a few profits that way because I do feel that there is a massive market correction after that, and a lot of stuff's already factored in on the Sunday morning. I know a lot of people find it volatile, so I'm not telling you to do that. But either way, it's a good way to define what days you trade on and if that has any correlation to whether you make profit or not. The other stuff is fairly straightforward. I mean, I put here if it's a bank holiday or not, which I feel is important because sometimes people trade on, if it's a big bank holiday, i.e. in EU or in the UK specifically, or in the US, it can have a massive standing on the markets, obviously, as you can appreciate. So if you put yes or no in there, it can give an indication as to whether it was luck in a profit, for example, or whether your losses seem to be coming without doubt whenever there's a bank holiday. So maybe you just should steer clear of those weekends when they're about. Date entry and date exit, that just gives me what my average length of time is in a position. Again, it's also something you can correlate to the profit or to the loss. So how long is your average profit running for? How long is your average loss cut with? The market itself in terms of the predominant market, so what we're looking at as the focal point. So the Australian dollar, I put, or the Canadian or the pound or whatever. I also class, I'll put US dollar for the S&P 500, as you can see here. And then here, very important, just to say whether I'm buying or selling. Obviously, it is important to know if you're more successful on the buy side or if you're more successful on the sell side. It's something that people seem very non-aware of. They kind of see losses or they see profits. They don't really know if they've got a bias towards one, or if they're better at spotting certain opportunities, if they're to go long or if they're to go short. So it's always a good indication. And also the execution type is what I've got here in column K. So that's just whether I've put in an order essentially, or if I've executed the trade in market, live prices. Sometimes that can be good. I know that some of my best trades come from where I just put in the order, and then if it hits that price it goes into entry, and then I don't need to really worry about finding the perfect spot. And it also stops me from getting tempted when it's only a few points away from where I need it to be and just entering early. Some cases it can burn you, obviously, because you can go in too early, or you miss your entry because it gets really close and then goes the way you thought it was going to go and you miss it. But still, that's sometimes preferable to getting in there well too early and then completely blowing the trade. Standard stuff here: entry price and exit price, more to calculate pips and whatnot, and then my lot size here. So as you can see here, this is showing 0.1, which on most MT4 accounts, that would be £1 a point. I use IG index, so the decimalization is sort of times 10, basically. So that is actually 10p a point on mine. And I log the risk here, which is really important, so you know how much you're risking per trade. Now, I'm doing a risk management video where I say to stick to 1 as an average. As you can see on some of these, I've risked a lot with the initial stop loss, but it's it's also to receive quite a lot. I wouldn't recommend doing that. I only did that when you're kind of amply sure, where you've got quite a lot of contributing factors that are going to give you that. But generally, you can see that my risk is under 1% or 1%. And very rarely has it strayed 3, and in those rare occasions 10. But if you look at my average, it's around 1, which I think is important. But it's always good to look at, because if you end up putting massive risk on, you get a massive loss. You know that there's probably something to do with your mentality. Here, my stop loss in pips. Obviously, your risk is determined by the amount, your lot size on those amount of pips that you're willing to lose. On average, mine sticks to between 30 and 100. Generally speaking, it's around 30. Unless it's on indices, in which case I give it a bit more breathing room, but that's usually why I'll lower the lot size in general. And this is my take profit targets. So sometimes you can see that in the earlier ones, I've got poor risk to reward on these. Others I've got 4 to 1, others 3 to 1, 2 to 1. So it just gives me an idea of how good the setups are, that I'm looking at. With this, I've got the pattern. I mean, I say with the pattern, it's with the kind of visuals, I guess, that I'm basing this trade off of. It's a good idea because, for example, I've got a descending triangle here, or selling into a downward trend, which is obviously kind of momentum trading. I can look at what ones are successful for me. Obviously, you can see if there's a recurring pattern that you're just not very good at predicting, then you just steer clear of it. The rationale is really just another backup of that. It's like, okay, so for example here, I've seen the bullish trend line with the channel that it's sticking to, and then it will be the rationale of why I'm doing it, going into a bullish trend line, more upside potential or whatever. Here, like descending triangle, preempting the next retracement, whatever it is, it's like the reason why I've decided to go in now, or I've put the order in. This U column here is for number of confluences, so how many different things I've seen that can contribute to that. Some people say you need 4, 5, 6, and obviously the more you have, the better. I try to keep my trading fairly simple with trend lines, market structure, occasionally sort of Fibonacci and whatnot. So generally speaking, the more the merrier, but I tend to be happy if I've got 2+, but obviously I'm working on getting more. The mentality is, a key one for me, because I do think that I put this in real time. Obviously, like I said, I've got a bit of a backlog, but I've noted it down on paper. I just haven't put it in the spreadsheet. But here you can see, I note when this is a venge trade, for example, like I'm trying to be honest on here. Did I make a profit on one of them? Yes, 21 quid. So it was a lot, with that size of account. But equally, I made a loss on another venge trade for 23. So I think it's safe to say that if you look at the venge trade trio here, I've lost about £4 overall. So if we already knew that I shouldn't do a venge trade, right? But that just goes to reissue it. When I put here, happy with setup, blah blah blah. Again, I've got a series of losses. So it's not to say that if I'm happy with the setup that is the be all and end all, but it's just an assessment of knowing, for example here we've got belligerent mindset. I thought, okay, well, let's just get into that then. Again, it was the CAD Japanese yen one that we were discussing before, but it got me a loss. Okay, 50-50, that's not necessarily a bad mindset, but it's a case of going, well, you've weighed up the risk. I think it could go, maybe it does, maybe it doesn't. And then risky and impatient, okay with entry, so it's more about being and trying to look at the commonalities in terms of where my head's at. W is the observation during. So it's just a brief description, but you can see in some of these, you know, I can then correlate. So I only saw these in profit, you know, so I never really saw, apart from when I first put the position on and the spread puts you in a little loss, I never saw anything other than profit. And here I was in profit. Dithering around, this one it says dithering around and looking suspect for all of these. Lo and behold, it gives me a loss. Okay. You know, this one was break even or 10 to 14 pips in profit at times, but then it stopped me out, you know, so there was obviously market activity in that. This one I always saw in loss, so only one of them made profit but the others didn't. In small profits, you know, again, it's fairly reflective how I'm viewing it during the trade. Look, profitable fairly early on, and I'm getting the big numbers in these here. Fairly widespread, you know, so therefore it's in loss, I got a loss. In profit but closed early, you know, so that could have been, you know, I would have taken a decision to do that because something maybe changed in the market. Look, break even quickly in the observation during, and then here we go, straight into a big profit. Loss straight out, resulted in a loss. So, do you know what I mean? Like, it's just interesting to see, so you know the behavior. Like if you're looking at positions and you give it sort of a few hours and they're in, you know, fall into these behaviors, you can see, you know, what works for you and what doesn't. The result is literally just what happened. Stopped out, you know, then sometimes I'll put, you know, stupid decision, over traded that one, you know, whatever. Then I list profit, loss or break even. Anything that's under £1, I don't class as a profit or a loss. 50p I think it is actually that I do that on. And then obviously the profit and loss outcome here. And the time is the amount I was in the trade. So you can correlate that in profitable trades, I tend to be in them for like one day on average, I think, and then losses tend to be in the same day. But it just means that, you know, that you can really refine things down to see if you can find the contributing factors, you know. So for example, you know, if I were to look at, let's put this into practice. So if I were to put a profit filter on, so I see all of the positions that I've profited on here, okay, across the 2 weeks, you can see that actually I haven't profited on that many, and, you know, and that's what we see in the trade success stats, right, which I'll just move on to in a moment. But you can see here that now if I look at the days, Sunday, Tuesday, Sunday, Tuesday. Interesting, right? So I trade all week, but these are the days. The days that I enter, the only profits that I've made in the first 2 weeks are trades that I've entered on a Sunday or a Tuesday. Pretty crazy, right? And then if we were to conversely look at the losses, so look at these. Monday entry points, a few Tuesday, but then mixed in with Thursday, Friday. So what you can see, the common thing here is that I very rarely lose if I trade on the Sunday. Do you see? So I've only got one loss on a trade that was opened on the Sunday night when market opens. The Monday entries, they weren't so great. Tuesday seems a bit of a 50-50 day for me, but if we then try and correlate why I lost, I was putting venge trades on. So I'd obviously lost something, or I was annoyed with the movement, or I missed the trick, or I was late entry, or whatever it may be. And then if we look at the other Tuesday we've got here is a risky trade. And then this one here, you know, I was happy with the setup, but ultimately it just stopped me out at a loss. So out of all those Tuesdays, there was only one that was really just unlucky. The rest of them, I shouldn't have traded it. You know, so it's quite interesting to really look back. I'm also not going to bore you with all of this because, you know, it can get a bit long-winded. Let's move on to the trade success stats, and just so you know how I'm looking at this, I've got this set up to measure the total amount of trades I take because I think that's important to know. Profits, losses, break evens, again, you know, so as it can give us the percentages here. You know, I want to be looking, so 36% win rate, as we discussed in the previous video, is terrible. A loss rate of 50% is not so bad, but it's not great by any stretch of the imagination. Break evens are obviously, we're fairly indifferent. At least it means that I'm committing to one side or the other, but it's really about how much profit you make that makes the difference. So as we were talking about with the risk management video, this 3.18 profit to loss ratio is the most important. That means to every one profit I make, I need to make 3 losses to break even. So whereas if we were 1-to-1, for example, you know, you'd only have to make 2 losses and you'd be in a loss. Whereas if I make 2 losses on this ratio, I'm still in profit, which gives you an indicator. So that's a key metric for me. The increase on the overall £1,000 account, obviously that's massively important because it just shows, you know, the rate in which we're growing and whether it's working effectively. And also the money amount. The money amount I'm not so fussed with, to be quite honest, because that's just a product of the percentages and the size of an account. But I do still have here on the, you know, the pound figures for the total amount of profitable trades I've made, which is 212. The total losing trades, which is 87. And what would be interesting is for me to say, for example, I go now back to the master spreadsheet. So I know that I've lost £87 worth of trades. Okay, so now I'll go into the losing pile, and these are all the culprits, right? So these are all the ones that I've lost on. Now, if we take a look at the mentality, for example, we've got the happy with the setups here, which was the Canadian Japanese yen, but a lot of these were taken out in close succession because I was playing around with the prices. That was a mistake. So I can look at that and go, okay, well, that was a problem, but it kind of is a bit of an anomaly in this example. But if we look at the kind of trades that I shouldn't have taken. So if we look here, okay, risky early entry, right? So I know that I shouldn't have taken that trade because I was entering way too soon. Now, if we look above here, belligerent, okay, but I was burnt twice already. So was I maybe doing it a bit, you know, on eggshells and not really quite committing to it? This one was risky. These 2 were venge trades, okay? So all of these, bar 1, were trades that I shouldn't have taken. So that's 8 trades that I shouldn't have taken at all. So if we calculate the loss on this, and this is all just coming down to my mentality, the only trade that I said I was more assured by was this one, which again was the CAD Japanese yen, so we can excuse that one from the list. Okay, so let's take £1.70 off of the loss, but that would still bring us in to a loss of around £57. Okay, and at that point on a £1,000 account, that's around 5.7%. So you see, when we take this back here, the total of losing trades would have been nearer £30 if I weren't so weak on the mental side, because that wasn't, you know, like a fundamental piece of bad luck. That was a case of me taking trades when I shouldn't, and I was open about it when I took them out. So as you can see, this gives you more of a balance. You know, aside from here, the average profit and the average loss is always good to know, but it's not, you know, mandatory. The non-loss stat I do feel is important for me, mainly because it's good to know how often I'm not losing, because half the battle is not blowing up your account. And if I'm, you know, if I'm not losing for over half of the time, then that's, you know, that's positive. Here's the monthly P&L for 2020. Obviously, I've only been trading in June so far. Now we're moving across to July. So we'll be updating that. And then this is each week of the challenge, you know, how much profit and loss we made in pounds, what percentage return we've made from the balance from the week before. So there we go. I appreciate this one's quite a long-winded one. The video is sort of over 20 minutes long, so I very highly doubt you've made it this far. But if anybody does, then great. If you've got any questions around it, or you'd like a copy of the spreadsheet, then do feel free to drop me a message either on my Instagram at matttomillion, or you can throw it in the comments in YouTube too. I'm going to hand back across to myself to wrap this clip up. Please stay with me. I hope you've enjoyed the content. I know it's been a long one, but we'll pick this up hopefully in the 4-week review when I've made even more money. Okay guys, so there you go. That's my journal and the reasons why I do the things that I do. For me, it was a massive turning point in the trading journey because it really just gives you stats. It gives you the data, and like they say, the figures don't lie, right? So you can take a look at all of the markets that make you profitable, all of the markets that you really struggle against. But overall, it's been a massive, massive step in the right direction for me. And I would implore any of you to do this when you're starting out, or whether you're, you know, halfway in, or you've made a bit of profit, but you're not quite sure how you got there. Put it in the journal, make sure that you can log it. You can go an additional step. I know that some people take screenshots before and after the trades that they enter, and that's something that maybe I'll look to do for this as time goes on, because I feel that when I report back, people would find that quite useful. But for me, it's more to analyze how well I'm trading, the things that I'm good at trading on, and sort of the overall performance against this challenge. So in the next one, we're going to look at the mentality around trading and how do we deal with bad weeks, bad trades, bad losses. Obviously, as you can appreciate from the previous video, the risk management does help with that, but we are all just human beings and our brain can always play tricks on us. And it's really just going to be a video about how I deal with that. It's going to show some of the mistakes I've made, but also some of the times that it's really paid off. So I've really hoped you've enjoyed this session on my journal. I've really enjoyed delivering it, and I really hope that you can maybe get some key takeaways and hopefully implement it into your own journey. If you've got any comments, questions, abuse, then stick it in the comments below, or head across to my Instagram at matttomillion to see all of my daily updates in terms of the profits, losses, and also some of the analysis that I'm displaying before I go into trades or even after trades have happened. But if I don't speak to you before, have a great week and I'll catch you on the next one.